Hello, this is Bob Gay speaking. I'm the creator of Otos. Otos is a learning algorithm that creates data by mining financial statements out of filings made by U.S. publicly traded companies with the Securities and Exchange Commission every 13 weeks. Every quarter since 1934, the SEC has required companies to file financial statements to provide investors with information about how the company is doing. We're able to create a historical record of those financial statements and compile them into a historical record for every company, which allows us to measure which factors, that is, which attributes of the company's historical performance record are the most highly related to the performance of the stock over time. Here's a picture of Apple Computer, which shows that from 2005 until 2007, the stock performed extremely well. In 2008, we had a correction. Again, from 2009 to 2012, the stock performed very well, and then we had another correction until the summer of 2013. Now we're on the third leg of what's been a very, very substantial decade-long price advance for Apple Computer, and over the past year, the stock has again, similarly to these previous two experiences, has begun to trade down. This is providing an unusual opportunity to buy the shares of Apple Computer because the share price is currently depressed. And what we know is that the dominant factors, that is those accounting metrics that have had the highest degree of correlation with the performance of the stock over the record of the company, are all still positive. Total invested capital, 96% correlated. EBITDA margin, that's earnings before interest, taxes, and depreciation amortization margin, 81% correlated, and the gross profit margin also 81% correlated. So what we're able to propose is that because these fundamental metrics of Apple Computer continue to perform well, that this recent price decline is providing an opportunity for us to buy the shares of Apple Computer. Once we have these all created for every company in the US stock market, we're able to arrive at conclusions about how the overall stock market itself will perform. This is a picture of the US stock market compared to long treasury bonds since 1995. And you can see that what's come to be known as the tech bubble, this big drop in share prices in 2000 until 2002, and then what's come to be called the financial crisis, which was this big drop in share prices that took place in 2008 and into early 2009. These are the principal performance metrics of the average US company over the period, and you can see that there's a relationship between the direction of the performance of stocks versus bonds and the direction of these important growth metrics. This one, the gross profit margin, this one, the sales growth rate. Using that, we were able to point out last summer, with share prices having rallied up to this old high, that in the face of a falling gross margin and lower sales growth, we were likely to have a weak stock market relative to bonds. Recently, of course, the stock market's been very substantially weak. In the last 2 weeks, its share prices declined by nearly 10%, nearly 12% relative to bonds. On this chart, it would show up as a picture something like this, where you've had a magnitude price decline of about that amount. What Otos does is supports investors in making decisions related to asset classes such as this one, related to portfolio construction and management, and related to individual stock selection decisions such as this one for Apple Computer. I invite you to join our introductory webinar coming up soon. It will provide you with an opportunity to learn more about how to deploy Otos in your own investment decision making. It will support you in designing and executing your portfolio and investing strategy, and it will support you ongoingly in making sure that the companies that are in your portfolio are consistent with your strategy and investing goals. Please click on the webinar link in your email that you just received that was carrying this recording and register for our introductory webinar coming up in the next couple of days. Thank you, and I'll look forward to seeing you on our call. Bye-bye.